Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. We've talked a lot about market volatility and the impact on investors. Today, I wanted to hear from somebody who has a slightly different perspective, overseeing the investment portfolios of a range of different not-for-profit groups, from schools to charities. Remember, this is general information only. You should get professional advice before making any investment decisions. Russell Investments is a global asset manager with more than $435 billion in assets under management and $1.7 trillion in assets under advice. Daniel Greyling is the Director Institutional at Russell Investments and runs the company's Outsourced Chief Investment Officer operation in Australia. Daniel, welcome to Fear and Greed.
Thanks, Sean. Thanks for having me.
I love the name, Russell's Outsourced Chief Investment Officer operation. I think I know what it does, but can you tell me?
Yeah, sure. It sounds quite grandiose, doesn't it? But it sort of, take it in its literal sense. So it's an outsourced chief investment officer function. So effectively, organizations, they can be not-for-profit organizations. You know, it could be defined benefit schemes, could be insurance companies. Anybody that's got a sizable investment portfolio but doesn't have the internal expertise to run that portfolio, they may look at outsourcing that function to a global organization that's got the scale and experience in managing investments.
Okay, and so it's not just not-for-profit, as you mentioned, it's kind of across a range of sectors.
That's right, yeah. So globally, we work with almost all types of institutional investors. Locally, it is predominantly not-for-profit investors, as well as some wholesale advisory type clients. But that said, I mean, not-for-profit, as you would know, Sean, in itself is quite a broad sector. And that's what I actually love about working in the sector is, you know, it covers an absolute plethora of different types of organisations.
How big is the sector? Is there some sort of number on it?
Yeah, it depends how you want to quantify it. I mean, in 2020, the not-for-profit sector generated around $180 billion in revenue.
Wow.
They account for 10% of the Australian workforce. So it's far from just the local sports or social club, which, of course, they're not for profit, but they are also involved in, many other areas like human rights, education, aged care, religious organisations. So it is quite sparse, yeah.
Okay, so when you're doing work as a chief investment officer for a not-for-profit, is the starting point any different to for-profit organisations?
The starting point probably isn't a great deal different. The difference with not-for-profit organisations is quite often they've got quite a unique set of investment objectives, and having an understanding of the sector and what those objectives are is really, really helpful. So let me give you an example. A not-for-profit organisation, they may have a corpus or an endowment portfolio, a large chunk of money that has either been bequested to them or given to them through government grants. They will typically invest that corpus, earning income and using that income to perpetuate the mission of that organisation. Quite often, a not-for-profit investor, unlike a for-profit investor, their mission will be to deliver a service or an obligation to the society in which they operate into perpetuity. So they've got very, very long-term investment horizons. I guess one of the other key characteristics with a not-for-profit investor, and this one is also really important, is their tax status. So a not-for-profit investor is a zero tax-paying entity, and that has ramifications on how they invest.
Do they tend to favour ESG or favour the societal, the S part of ESG? I mean, is that too broad a brush to say?
No, it's a great question. ESG is a broad topic in and itself. I think it's easier when not-for-profit investors, unlike other types of investors, quite often they will have very specific missions. Missions to either improve the society in which they live, improve human rights, or reduce homelessness, or whatever the cause may be.
Yeah.
ESG is an interesting area because it's evolved a lot over the past couple of years, and it's quite interesting that a lot of not-for-profit investors may actually be investing in businesses or companies through their investment portfolio that's not actually aligned with what their overall mission is. For example, investing in casinos or online gambling companies, which do actually make up your broad-based market indexes. So recently, the catalyst has sort of been organizations like Russell have developed ways to build more bespoke investment portfolios for those not-for-profit investors to actually allow them to reflect the values of their organization in their investment portfolio.
Right.
And without sort of laboring the point, one thing I would say is that the more progressive not-for-profit organizations are actually taking that even one step further. They're actually using their corpus or their endowment to perpetuate their mission. So an example of that would be impact investing. So investing in local housing that's still going to generate a return, but also has positive societal benefits.
I remember reading a great story about the Sisters of Mercy, which is a convent or a group of nuns, and they had a new investment manager who said, why are we investing in big business? We should be investing in homelessness, etc.
Yep.
And at least at the time I read it, which is a couple of years ago, they had done incredibly well. I'm not sure where they're up to now, but it's that sort of example where they're putting their money exactly where their belief is.
Exactly. And, it's such a nice story. I mean, I've been working in the industry for about 15 years, and it's what I really like about working with not-for-profit organizations is, the mission is good. It feels good to help them perpetuate the mission. I'm yet to find someone in the industry that I don't like working with. It draws a special kind of people. So, it's nice, and that's a good example.
Stay with me, Daniel. We'll be back in a minute. My guest this morning is Daniel Greyling, Director Institutional at Russell Investments. Okay, what about the risk of, we talk about investing a lot on fear and greed, and we always talk about diversification. What we're talking about here, though, has the potential to reduce diversification, in as much as if you are deciding that, you have a corpus and you want to put that amount of money towards something which your charity stands for, you are then wiping out lots of other investment options.
Yeah, absolutely. So I guess the first thing is with diversification, the only free lunch, if you like. One of the things that we do when we work with our clients is make sure that we understand their investment objectives and also put together a portfolio that is very well diversified. That is absolutely paramount in making sure that the corpus is going to carry on into perpetuity, and that not-for-profit organization or that company is going to be able to deliver on its obligations. You can't have a not-for-profit organization turn around, 1 year and say, oops, investments didn't do so well. Unfortunately, we're not going to be able to fund this sort of housing shelter or whatever the example may be. So diversification, super important. When we talk about impact investing, certainly wouldn't be a all or nothing kind of play. We would sit down with the organization, we would look at a strategic asset allocation and actually use that as a diversifier to a traditional portfolio. And so flipping that around, a lot of organizations that don't seek the help of a professional investment partner, they may go with a typical sort of barbell approach, 70% equities, 30% bonds. But, as you would know, to the 12 months to the end of June 2022, both of those asset classes returned almost negative 10%. So not a lot of diversification, whereas some of these unlisted property ventures like the one you referenced with the Sisters of Mercy, that actually would have been a great diversifier in that regard.
Yeah, okay. What about shareholder advocacy? We hear lots about fund managers becoming advocates for change, particularly in the ESG space. Is there a sense that in the not-for-profit space, they are more or less involved in shareholder advocacy? Because I can see an argument for both sides, to be honest.
Yeah, absolutely. That's actually a great question. I haven't had that question framed in that way. I think generally speaking, one of the things that we notice from an ESG perspective is that institutional investors, the school of thought is shifting a little bit away from divestment and more toward active engagement or active ownership to effectively influence the behavior of the company as opposed to just divesting from it. And, the recent example with AGL and Cannon Brooks holding a stake in that company and not allowing that demerger is a really classic example of that playing out. I think a lot of that's been driven by net zero, which is a very prominent topic within ESG. And certainly when you look at something like net zero, if you're going to get to net zero by 2050, that's going to take everyone lifting as opposed to just people deciding to divest. Not saying that's not
Yeah.
appropriate in some circumstances, but the example still sort of stands. You get other sectors like tobacco and gambling where it is a little bit more black and white, if you like. Those companies have a very clear objective, and that either is in line or not in line with your values. It's unlikely that a tobacco company is going to turn around in 5 or 10 years off the back of active ownership of its shareholders and do something completely different, right? So in that regard, divestment may be an appropriate strategy. But with not-for-profit investors, it varies. Some foundations and endowments and those types of investors are more inclined to be involved in active ownership. But back to the tobacco example, there are some other not-for-profits, like think about some types of religious organizations where certain activities of companies is just not aligned with their beliefs. And it's really important as an investment advisor to be able to deal with both of those scenarios.
Daniel, one final question. When you're thinking about investing money for not-for-profits, do you feel more pressure? I mean, I've given money to lots of not-for-profits, and that's kind of my $10 you're taking and investing. Now, it's exactly the same. It's my superannuation money, so I kind of do get that. But is there some sort of sense that often it's people who are giving away their own money, their $10 or their $20 that you're investing, so there's an extra pressure?
Yeah, it's an interesting point. I mean, I think that's one of the things that I really like about working in financial services and in my role is being able to help and improve the financial outcomes of the clients and partners that we work with. Certainly, we apply the same level of rigor regardless of the type of organization. But, I do really like working with the not-for-profit sector, and, to perhaps frame it a different way, it makes me really proud to be contributing positively to some of the causes and missions of the organizations we work with. And also just the variety of different organizations that you do get to work with is quite nice. Helping them implement a strong governance process and allowing them to benefit from the combined scale of an organization like Russell Investments, it saves them dollars on their bottom line, which can then be put back into their mission. And that does really make me proud.
Daniel, thank you for talking to Fear and Greed.
Thanks, Sean. It's been a pleasure.
That was Daniel Greyling, Director Institutional at Russell Investments. This is the Fear and Greed Daily Interview. Remember, this information is general in nature and you should seek professional advice before making any investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.